We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Nest. See you on the show.
Good morning, Rollup Army. Rollup Army, good morning. Buenos dias, bom dia, brothers. Bom dia. We are looking good here. Last night, we were not looking so good. Today, we're so back. It's so over. We're so back. Welcome to the bear market. It's going to be like this for a little longer, but I think we're right now. I think we nailed the Bitcoin not going to the gulag thesis. Stretched back almost to 90. Remember, that was our bull thesis. The most asymmetrical, silly bull thesis is stretched back within 10% of par. I think Saylor hit the sell button on some Bitcoin. I think he's buying back stretch. I think the fears are way overblown, and I think we're looking good for the summer lull bounce that we've been waiting for and counting on for continued strengths in our coins. And I think we're looking good here. As always, guys, welcome back to the Rollup. You're watching the Rollup. Today's July 1st. Happy Canada Day to all the Canadians out there. My parents were both born in Canada. Very small suburban regions of Canada. I used to go up there every summer, hang out for a couple months. I was like that kid in school that would go to the foreign country for 3 months and then come back to the States 1 week before the school started from Florida, so hot in the summer. So first generation American here. My parents are, fully Canadian. I got the Canadian chats and the Canadian flags all over the text chats today. So happy Canada Day to everyone. W's in the chat. Good morning, NOC. Good morning, Freedom Guy. As always, guys, we are live from the Tokenization Tower, The Nest, broadcasting from the financial capital of the world, powered by our friends at Plume with their on-chain asset management infrastructure called Nest Vault. We've got a great show ahead today. We've got markets, we've got charts, we've got our coins, we've got our theses, and we have 3 guests. We've got welcome back to the tower. Chainlink's going to come on briefly just to talk about this news with World, the new Solana prediction market. Archetype's partner talking about RWAs. Streamex, a public company, is going to come in and talk about what they're doing. And then AI Supercycle with a very new, interesting inference company, AntSeed. They are doing inference at scale right now, very kind of early stage company, but doing pretty big numbers. So pretty stoked to be back in the tower. Had an insane World Cup match last night. Took our longest standing employee, Alex, to the game. Shout out to Predict Street for giving us the tickets. And I mean, we saw France dominate Sweden 3-0. Mbappe 2 goals. I mean, these guys are just these guys are just cut from a different cloth. I mean, I've never seen anything like it. So, good morning, Greg. Yes, ooh, Canada. Oh, Canada. We stand on guard for thee. Let's go, Canada. All right, guys, let's get into the show. As always, our topics are powered by our friends at Trezor. Visit Trezor.io. Use code ROLLUP10 to get yourself a Trezor today. Let's get into it. Before we do, let me tell you about our stablecoin partner, Frax, building infrastructure to the future of digital money. Open, stable, borderless. Visit frax.com today to learn more. Guys, it is hot as hell. It is hot as hell. It is 84 degrees and sunny. There is a saying that I will not say, but yeah, it is hot. It is hot in the studio. It is 79.5 already in here, guys. So yeah, dark t-shirt, nice fabric, Uniqlo. We're in good hands. But yeah, today's show will be long. Tomorrow's will be a little shorter. And then I'm flying off to North Carolina tomorrow night. Going to spend the weekend for July 4th in the woods with my brother and a bunch of our friends, his girlfriend and a couple of other girlfriends. So should be fun. And yeah, that's my weekend plans. Guys, as always, powered by Relay.link. Visit Relay.link to start swapping today. Best cross-chain swaps in the market. Let's get into the markets. Before we do, let me tell you about Dmitriy, our tokenized equities partner, bringing any asset from the stock market on-chain tradable today. Visit Dmitriy.org or Dmitriy.com to learn more. All right, guys, we got the lows. I mean, this is green, green, green. Solana up 6%, Chainlink up 3.5%, Near up 2%, and Ethereum and Bitcoin up 3% as well. So yesterday we got that sweep for Bitcoin down to 57.7. And I was in the office here at about 9 p.m. with Alex post the World Cup game. And I saw the sweep happen, and then I just saw massive buy pressure. Honestly, I thought we were gonna be way up by this morning on hype. Hype's, swept 62 and went all the way to 65. Came back down to 62 this morning, hanging out again at 64.7. Per got a nice bounce. We need that thing to keep going for us. Bitcoin looks pretty good. Aerodrome looks pretty strong. Got a nice bounce when it needed. Lighter's cooling off. Lighter's cooling off a little bit, which I think is expected. It touched that $2 mark. They had a pretty nice tokenomics news drop. I think that we're going to see more from them in the coming day or two. So stay tuned for that from us tomorrow morning on the show. Honestly, guys, Stretch is, what is Stretch at? Stretch is at 88. I think we're good here for a bit. Might get another pullback on Stretch, and then it might, make its next move back up. But I think our bull thesis for the market bouncing is happening. So now I think it's just about, staying in the right positions and staying emotionally strong, because it is a bit sketchy always with Bitcoin at the lows to take positions, especially in alts. But these tokens that we've been holding have been outperforming a ton. Venice is up a bunch as well today, 20% off the news that they're launching that they raised money at a $1 billion valuation or higher. So yeah, guys, overall, I think it was a little scary there for a bit, but I think a couple daily closes on Bitcoin above 60, a weekly close at 62, something like that. I think we get out of the woodwork for a bit. A weekly close above 63 would be amazing. We'll see if that happens. But yeah, I think our thesis is playing out. S&P looks great. NASDAQ looks great. Those are both pushing strong. S&P is ready to go to new all-time highs, and NASDAQ is basically at the same position. So both of those look good. Continued strength in equities. Credit is expanding as per our friend Capital Flows. So as always, our markets are powered by our friends at Zama. Visit zama.org to learn more about what they are doing with their confidential compute and confidential transactions on-chain on Ethereum. All right, let's move into the news. Before we do, let me tell you about Near and Near.com, your home for building, discovering, and using apps on-chain. One account, no borders, your financial life, all on-chain. Visit Near.com to learn more about what they're doing there. And guys, Andy Constant has been evaluating Hyperliquid. He has been talking about crypto a lot more on the timeline. This guy is a large, basically TradFi asset manager. I think he trades his own book, maybe some clients' assets. I would imagine his AUM is in the 8 figures to 9 figures. And so he's been paying a lot of attention to Hyperliquid lately. He's been paying a lot of attention to tokenization and to what's happening in this kind of category. And so here he says, what if holding TradFi and real assets on chain is not something that anyone really cares about, and decentralizing is just a tin hat myth? There are plenty of anti-fiat stores of value without Bitcoin or crypto. Existing payment rails are fine as is, except for a small cohort of tech-enabled unbanked transactions and the ones who need to avoid KYC. Traditional exchanges will meet all degen gambling and 24/7 trading demand. And so he's basically refuting the entire thesis for tokenization, perps, stablecoins, prediction markets right here. He's basically saying, what if all of this stuff is being built and no one really cares about TradFi and real assets on chain? No one really cares to hold Bitcoin because you can hold gold. Stablecoins don't need to exist because existing ACH and wire rails are fine, and only a small cohort of the world needs stablecoins and people who need to avoid KYC. And then what if perps don't really need to happen in a decentralized context? And what if the CME and the CBOE and NASDAQ and everyone else comes out and is able to meet the demand? Then why do we need tokenized assets, stablecoins, perps? Why do we need crypto rails? And I just think Andy is just so wrong here. He's just so wrong here. The practical efficiency and financial access of crypto is enabling a far more capital efficient financial system from the ground up. It's enabling market access from previously not accessible regions of the world to trade US equities, to invest into US dollars and earn the SOFR rate. It is enabling folks like ourselves to trade 24/7 and to express our market views in a market that is so much smaller and has so much more upside than the traditional market. Tokenizing all of the assets in the world that are going to be coming on chain is going to enable them to have a far more efficient ability to be traded and for price discovery to happen for these markets. It's going to unlock new markets. For example, inference markets and compute markets. The derivatives for compute are going to happen on chain. They're going to happen 24/7 and they're going to happen on chain. So new market creation, new market access, financial efficiency, a young generation wanting to invest and get a lot of upside in a market that isn't overly dominated by boomers, and a very loyal, deep tribalistic nature to libertarian and anti-state, anti-centralization community. So sure, Andy, I get your perspective. I understand what you mean, but this is a fun hypothetical. And obviously I'm biased here because my entire career and portfolio is betting on this to not be the case. But I don't think that this is the case at all. And I don't think that people even understand what's happening with tokenization, stablecoins, and perps. I'm just glad that Andy does seem to get it and he does seem to understand the benefits. That's why I put this tweet up. So, good tweet, good hypothetical, completely disagree, and completely would assume that this tweet would be proven wrong within less than half a decade. All right, let's keep it rolling into Yano here. Yo, we hear strange, strong move for ETH today. That shit should be dead already. Okay, interesting. Chainlink again, will the value accrual question be covered? It's gonna be a really short segment, so I doubt it. Strange song, ETH will be fine. The 1 year chart on Lighter, yeah, bullish, man. Bullish. All right, it took us 5 years to realize not everyone needs their own chain. Let's not spend another 5 years to realize not everyone needs their own stablecoin. Ho, ho, ho. So guys, if you were watching the Rollup for like the last 2 years, you remember we went on like this modular bullish phase where we were talking about the expansion of L2s, the expansion of new chains, and thinking about how this is all gonna work, right? Thinking about the scaling of these ecosystems and thinking about the kind of specialized need for different blockchains. We were just wrong. Like, we were just flat out wrong. Like, there is a massive consolidation happening in the chain landscape. Massive. I mean, ETH, Solana, insert a couple more here. Robinhood chain, I think, is coming out. I think I saw that. I think we covered that on Monday. I think that's coming out like this week. So like, there's a consolidation happening of chains, and everyone does not need their own chain. In fact, everyone needing their own chain kind of defeats the whole purpose of composability that blockchains bring. So I think this is kind of like a funny tweet. And on the stablecoin side, when it came to launching your own chain, the economics were such that you were able to generate fees, launch a token at a higher valuation because you're a blockchain, and you had this kind of infrastructure premium. That doesn't exist anymore. It's really just more of an application and revenue premium now. And so why people are launching their own stablecoins is because they've seen the success of Tether and Circle, where you get a couple $1 billion in your stablecoin and you don't have to pass back yield. And so you're earning 3 to 4% on $5 billion annually. And there's your business and there's your profitability. And so people are very clearly seeing this move to launching the stablecoin as a very easy economic win. Problem is, a lot of these people are going to find out what the same thing that people who were trying to launch chains found out, which is that at some point you reach this commoditization point where the market is just saturated with chains and saturated with stablecoins, and your stablecoin doesn't surpass $200 million of TVL because nobody cares to use yours, and then the winners just kind of become the winners. Right, and they kind of amass the majority of the TVL and of the yield and of the profits. So I agree with Yano here. I think he has a good take, and I think that I also don't want to see stablecoins launched for the sake of it. Yo, just joined. What's up, new type? Are you guys going to talk about World XYZ? Yes, and we have not talked about it yet, but I believe we are about to talk about it. We're going to get actually William up, and we're going to get him as part of the show. and we're going to talk about what's happening with World. Before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation, higher yields, no leverage. Visit infinify.xyz to learn more about what they're doing there. Everyone's simping to Tempo. Like, this is the kingmaker in the industry. DeFi Dad coming out hot. Guys, what is your opinion on Tempo? Tell me in the chat what you guys think about Tempo. $15 million of total value locked. Stablecoin market cap, 31 million. And yeah, obviously not a lot happening. 25K in daily DEX volume. And whether or not we even need this, $215 in fees, $0 in revenue, 7,000 active addresses. So there's two parts to this. There's Tempo's early, and obviously they don't have a lot of traction in this bear market, and obviously there's more to come from them. And then there's the, why should we use Tempo when we can just use Ethereum, Solana, Tron, Plasma? Ark's launching, that's another competitor. So I have zero stake in Tempo. And if I did, I would probably defend this a lot harder. But since I'm just kind of looking at this from afar, I would say they have a lot of work to do. But I would also say that these stats don't really accurately represent what's happening behind the scenes. Like, I think what's happening behind the scenes in Tempo is that there's actually enterprise adoption happening. But I don't know if it's necessarily reflecting in DeFi Llama. So yeah, these guys have a lot of work to do. Their brand also had like that highly like, you know, I don't know. It was like that sage branding where it's like the best, you just kind of like knowledge, like higher power vibe. Honestly, I think people have just stopped caring.
Embarrassing.
About Tempo a bit. I think people have stopped caring about a lot of things. And I don't think it's a Tempo specific thing, but I think that they're doing really great work. And I think that as someone who wants to see this industry succeed, I think you want to support them and you want to see them win. So we'll see if the Corpo chain is the end all be all. Personally, I'd rather see this on a permissionless public chain, but we'll see. We'll see. All right, guys, so New Type is asking about World. What is the story behind Tempo? I mean, they launched this chain and Stripe was like their big backer, and they're basically part of Stripe, and they're very early on. And so the story is that they have a very nice distribution wedge with Stripe and a lot of potential enterprise B2B deals, and that there's a lot to to kind of potentially see there. So that's the story. All right, guys, we're going to talk about World launching as Solana's #1 prediction market. So I think this is something interesting. We actually have a special guest for this part as well. We've got William Reilly, the head of CeFi and global sales at Chainlink. And so we're going to talk about what is happening with World and get into it. So let's go ahead and get into the segment with World. Zama has 40 million in total value shielded, 14 million in Morpho Vault curated by a Steakhouse Finance Grade A, and they're making moves in RWA sleeper. Okay, I like it. All right, let's get into this World prediction market news here. So World launches as the Solana prediction market. Will, welcome to the show. Good to have you back, buddy. World launched as a fully on-chain prediction market built directly on Solana and accessible through Phantom. Users can trade outcomes tied to crypto prices and the 2026 FIFA World Cup. Every position, trade, and settlement uses real Solana liquidity rather than an off-chain order system. And Chainlink is providing the primary data feeds for fast market resolution. And the platform uses Phantom stable asset cash for low cost trading and automatic redemption. So Leo, if you just kind of scroll down through here, we'll be able to kind of read through this. Will, man, welcome back to the show. Good to have you. That's the context. Obviously, prediction markets are hot. We were talking about this in the tower just a couple of weeks ago. World Cup's heaving. I was just at the game last night. It was epic. You see all the prediction market talk. Overall, I mean, for lack of a better term, sports gambling with the young generation is growing rapidly. Predictions kind of tangential here. talk to us about this, man. What is World, and kind of what's your read on Solana launching their own kind of prediction market?
Yeah, what is World is a great question that we were asking it for roughly over a week. So I think maybe you saw some of the tweets come out.
Yeah.
And I think we kind of touched on this, Andy, that the big ecosystem that's missing, last time we spoke, the big ecosystem that's missing a really solid prediction market product is the Solana ecosystem, which is a natural fit for a bunch of folks who are into memes and taking quick hits on Solana. This world is being accessible via the likes of Phantom, and we're really excited to become the oracle layer for World in their prediction market. Right now, we're powering their FIFA World Cup markets as well as their up-down markets, and the reason why World, and again, I think kind of just expand on what we touched on the last time we chatted. These types of prediction markets are coming to Oracle. An Oracle layer such as Chainlink is they need highly reliable and scalable infrastructure to run these markets. You look at a team. Like the team behind World is very well known for order matching and creating some of the best on-chain order matching systems specifically in the Solana ecosystem, but also in the DeFi ecosystem. That's their focus. That's their bread and butter. They need a reliable system to scale upon, and that's where we've been working with them for many months now. Scoping out their integration system, help developing the Oracle layer, and this really just allows us to accelerate their growth from day one, which begins today.
Beautiful. And so when it comes to World kind of launching here with the World Cup markets as well as the up-down markets, part of this is fast market resolution, right? Because from the user perspective, like when I'm using Polymarket or Kalshi or whatever, I'm typically like in the World Cup, right? For example, these games are like an hour apart, and sometimes they start. Sometimes there's two in the same time, and so it's like for entertainment purposes, people like to roll over these predictions quickly, right? Like you hit one or you lose one, you want to keep going. What does fast market resolution mean in the context for Chainlink here?
Yeah, so fast market resolution, you're absolutely right. People want to get back into the game. Any prediction market that's using kind of like a legacy optimistic oracle is, one of the resistant factors is that they have to wait for the humans involved to all come to consensus, and then the payout can happen. This takes anywhere from 45 minutes to 2 hours, depending on the market type. I was even speaking to one of my fellow friends, and they're using a prediction market that has, that leverages this type of Oracle infrastructure with the optimistic layer, and he likes to play some of the props up in the first half of the game. Yeah. He said, he was telling me, he said, well, if I land a win in the first half of the game, I can't take that money back and put it back into the system until the game's already over. I pretty much wait for the game to conclude before I can even get my first half bet back, my position back. So this is where Chainlink's deterministic Oracle setup allows for resolution to happen within minutes of the game ending. With high confidence, we check multiple data sources from data providers to the order books itself and look for multiple matches to provide this immediate resolution factor. Not only is it a better UX, but it's also better for the prediction markets that themselves, these platforms, as they get a higher availability to money velocity, which naturally increases the volumes that happen on their prediction markets.
Yeah, I love it. I mean, just kind of like last thing here, more broad speaking, obviously you've got Polymarket, Kalshi as the leaders of the prediction market world. And then when you think about kind of other chains launching prediction markets, it's kind of an interesting predicament here for Solana, where they're like, look, we could probably aggregate these into our wallets and have distribution that way, or we could launch our own and try to grow our own user base here. What's your like what do you anticipate from prediction markets like World, who are obviously starting much smaller, when it comes to kind of launching on Solana. Does this just then kind of become like the de facto Solana prediction market? And is this something that maybe you could see, start to happen across other, L1 and L2 ecosystems as well?
Yeah, for sure. So I think you're going to see definitely a continued proliferation of prediction markets coming out month over month. And I think as everything matures, World will establish themselves as the de facto prediction market within the Solana ecosystem. I think they have all the right players behind them within that ecosystem to make that a reality as well. You look at, Polymarket's not going anywhere, Kalshi's not going anywhere. World is kicking off and establishing themselves today. I think what we're going to see is in the matured state of prediction markets, you're going to have your clear-cut winners, but they will be clearly available in certain ecosystems and in certain regions. So just like we see different regional adoption or different kind of market types or structures across different blockchains, we're going to see this in different prediction markets. And then if you want to look at prediction markets similar to exchanges in the world, you still have, Binance is huge, but OKX is still massive as well. Coinbase does quite well, and you still have players like Kraken and Gemini. So, and they all provide the same services, right? They're just in different regional assets points, and it's just something that people will have optionality for. So I think World is going to do a phenomenal job, and we're really excited to be partners with them on this launch.
Love it. World's also using Phantom here, Chainlink. Someone's curious about other companies that they may be using. Obviously, Solana. Do you have any insight on that? Any other partners from the World side?
Yeah, so I think they, from the best I know, is they have a phenomenal relationship with one of the largest market makers in the ecosystem. I don't know if I can name names, but I think they're quite well known. And I'm going to guesstimate that there is many folks within the Solana ecosystems that will integrate as a front-end provider. So just because you see Phantom as a go-to place today, World will have their own front end, and I think you're going to see dozens of others also have their own front end as well.
Love it. Will, congrats, man. This is awesome. I think this is one of the first iterations of actually putting sports data on chain. So congrats, and this is a whole new kind of territory for the entire ecosystem.
Fantastic. Always a pleasure, Andy. Thanks.
Cheers,
for having
buddy.
me.
Quick one today, but thanks for coming.
No, anytime. Have a good one.
Cheers, buddy.
Cheers. Bye-bye.
Alrighty, guys. The block says that Standard Chartered is fucking bullish right now. I mean, they're coming out and they're saying Aave to, what do they say? Aave to 3,500. I think that's what we read last time, right, guys? Aave to 3,500. Standard Chartered is saying Morpho is going to 33x to $60 by 2030. Guys, I'm telling you guys, we are underestimating how bullish these banks are on our primitives. Like they know they're going to bring just billions of dollars of tokenized assets and stablecoins on chain, and they know they're going to deposit them in protocols like Morpho and Aave. Like, guys, we are, as much as this sounds absolutely retarded right now, it's 33x, it's like deep bear, nobody can see this thing. Dude, Morpho trades to $10, and then what? It's a 6x from there. It feels like it's a pitching wedge. And so the bank cites Morpho vaults and DeFi lending expansion as primary drivers for the projected valuation increase. Why, guys? Why? Because the amount of tokenized assets and stablecoins that are coming on chain is going to explode, and they will live on Morpho. Morpho needs to figure out their tokenomics, though. The only reason I don't own Morpho in size right now, because I would love to, is they don't redirect any meaningful amount of revenues back to the token, and there is just not a clear value accrual mechanism for Morpho, the asset. Freedom Guy says, I've been saying we're super early, just back it up. Yeah, I feel you. Ask them if there'll be an integration with Perps and Hyperliquid. I think they're still trying to figure that out. I'm not exactly sure what the Oracle integration pipeline is right now for Hyperliquid or Lighter. actually. So Bitcoin's pulling back a bit, 59.7. We need this thing to hold up here. We need this thing to hold up here, guys. All right, let's keep it rolling into the next piece. I just thought this was sick. This was awesome to see for them. And we need to see more of this. I mean, we need to see more bullishness from banks and from people inside the industry as well. I mean, come on. Let's get into daily equity, guys, because semiconductors are going through a bit of a reshuffling here. I think it's important to cover it. As always, powered by our friends at Denari. Let's get into the daily equity segment of the show today. U.S. chip stocks are on a historic run. The semiconductor index, the Philadelphia Semiconductor Index, has outperformed the S&P 500 by 85 percentage points in the first half of this year. I was at a bar about 3 weeks ago for the Knicks game, maybe it's about a month ago, and I was asking my buddy who works at Blackstone, which is obviously a massive, financial services company. He probably makes like $400K a year. He's like 27. Absolute legend. And he's like, yeah, man, I am all in 3X levered semiconductor ETF. I don't know how he's doing right now. Let's check that out real quick. What is it? SOX? I mean, this thing looks pretty topped out, but I mean, it's just insane. I mean, how can you fight it? This would exceed the previous record set by the dot-com bubble in H1 2000 by 15 percentage point. It is up 94% in 2026 compared to a 9% increase in S&P 500. Both of those are still just insane. S&P and SOX being up those amounts. SanDisk has scored 764%, Micron over 300%. The U.S. chip stock boom is rewriting the record books. You scroll down a bit, I mean, you see the absolute outperformance here, the best first half versus the S&P ever, guys. I missed it. I missed this trade. I missed it. I missed Micron and I missed semiconductors. I missed Meiri as well. Completely missed it. Actually, that guy Greg on Twitter, he's got like a weird looking PFP. He put up this post about the cage and how the cage has caught a lot of people. And unfortunately, a lot of us are probably stuck in the crypto cage this first half of the year when really our time was better spent throwing our capital on the AI stocks. I should have done it. I had a good bit of capital in my brokerage account. I should have done it. And now I just don't think I think it's too late now. I'm not following here when crypto looks like this, and I have a lot of conviction in Hyperliquid, Lighter, Bitcoin, select assets. I really want to see more folk get their tokenomics dialed, and it's a fat shove. I don't even think that they need to necessarily, but if they can, it's a shove. It's a big shove for sure. That's our daily equity, guys. Semiconductors are leaving the S&P behind. Insane first half performance. I am not buying here. I'm not shorting. I'm staying away from this trade. I think it's been I think it's been ran through. Yeah, SOXL. I've been invested in Link for over 6 years. It's simply disappointing. Unless they have a monopoly, I don't see it happening. I think Link's going to do well. We had the virtual baking guy come on the show and talk to us about how Link is a digital commodity as per the SEC rules. So I think it's going to be just fine once clarity gets through. All right, guys, that's our daily equity powered by our friends at Denari. As always, great friends at Denari. Let's keep it rolling into the next piece. Before we do, let me tell you about LeFi, our premier cross-chain partner. Universal market access for digital assets. Visit Lee.fi or Jumper Exchange to learn more. Guys, Lighter is doing their end of Q2 investor call on Thursday, July 2nd. That is tomorrow at 10:30 a.m. It'll be an update from their founder, Vlad, and a Q&A session. As you guys know, we're big Lighter bulls here and think that this perps category is going to massively expand in the coming years. There's a Google form to fill out. Would highly recommend filling it out. I know that Edward in the chat and a bunch of you guys are bullish on Lighter and are holding it as one of our core holdings. Definitely want to see what's coming from this. Obviously, they just had that news about buybacks that sent the token to $2. And just like more generally, guys, I think this is what has to happen for the industry. And projects like Lighter are setting the standard here where it's like, hey, look, we're going to do a quarterly investor call. We're going to be very transparent about our finances, about our token economics, about our roadmap, about our plans. We're probably going to launch some sort of like partnership and news around it. And we're going to make it a marketing moment, and we're going to make it a community moment. And more teams need to do this. More teams need to have an actual investor relations setup that does quarterly calls, that is very transparent about their finances, and has a CEO taking questions from the audience and actually running like a 60 to 90 minute quarterly investor call. These tokens are going to start to look more and more like equities. And I think the projects that are actually going out and doing that and kind of pushing that trend forward are going to get the benefit from the market reaction. Like, I don't want to bid any project that isn't doing stuff like this or that isn't fully transparent. They're not investable. They're not investable. If I don't know what I own, if I don't have the founder answering community questions, being transparent, doing transparent economics, then I don't want to invest in the project. And so I think this is going to be a great investor call. Might be some surprises, might be some bullish news. And I just think that this type of stuff is going to continue to set the standard for the space going forward at large. And so I'd recommend guys hopping in that call, checking it out, especially if you're holding the token. Buying our select quality coins now is exactly like buying Apple, Nvidia, Microsoft, Amazon, Google in 2002. Our 20-year upside is incalculable, 1,000x. Dude, fuck. Music to my ears, man. Let's go, Greg. Let's go. We're still early, man. We're still so early. We're still so early. We're so early. We are winning. We are so early. Guys, we've got our first guest, Dmitriy Berenzon, a partner at Archetype who put out a amazing RWA report. I'm going to pull it up here as well, guys, so I have it front and handy. And we're going to talk about exactly what we've been talking about, which has been this tokenization thesis and how this is going to explode. And it's going to explode. And Dmitriy has a very interesting kind of like evolutionary thesis here for like how stablecoins are going to lead to the rise of RWAs and how that's going to lead to the tokenized equities and how this all kind of comes together. And so, excuse me there, Zin's kicking hard. He basically wrote a piece that proposes a taxonomy for the different types of RWAs, discusses the adoption sequence of them, and outlines the issues that are preventing the continued adoption of them. So I think it's going to be a really insightful piece. Lighter and hype, just like Pith and Link, remind me of the cola wars of the 70s. Coke and Pepsi both did well, but Pepsi was the much better ROI. Wow. Yo, that is crazy. That is crazy. So Pepsi outperformed Coke in the 70s.
Wow.
Interesting. You could argue that Pepsi is lighter and that Coke is hyperliquid. Greg is on point. I agree, Greg. I'm with you, man. I'm with you. All right, guys. I think that was it on the little Bitcoin dump. I think we go above 60K and we stay above 60K for a while now, guys. And I think that's going to bode very well for our Coke and Pepsi bags. Summer bounce, baby. Summer bounce is coming. The Bears were telling us that Stretch was going to zero. And what do? We told him to go home. We told him to go home. All right, let's get Dmitriy up. We're going to get him back in the live room. Let's get him up on the show. And let's get this party started here. I'm actually also going to pull my screen up throughout the show. And we're going to roll through his piece. I think there's a lot to kind of unpack here from the graphics side as well that he put out. And so, yeah. Let's get into it. Let's get Dmitriy up. It's been a while since I've chatted with him. Dmitriy is a partner at Archetype VC. He leads research and investments in crypto infra, deep in DeFi, and RWAs. Previously a research partner at 1KX, held roles at Bollinger and Koi Fund, Cal Blockchain, and Berkeley alum. He's known for his clear writing on stablecoins and backing early stage projects for the on-chain economy. And whatever else Claude is going to tell us about Dmitriy is what we're going to tell you guys about Dmitriy, because that's the world that we live in. We don't think for ourselves anymore. We use these LLMs as our brains. Welcome to the future, guys. This is the dystopian future that you guys invested in. Dmitriy, welcome to the show. Good to have you back, man. I love the article that you wrote. It's good to see you, man.
Good to see you. Thanks for having me.
Yes, sir. Yes, sir. It's good to see you, man. Man, so obviously this is happening. Like this being RWAs, this being tokenization. I'm kind of thinking about this right now as tokenization, stablecoins, perps. Like these are like three exports of this industry that are all like interconnected in various ways and contributing to the rise of tokenized equities on chain, stablecoins, tokenized deposits, and and other asset classes as well. And we're just seeing all of these right now explode in attention, in value, in mind share, and in adoption. And so you kind of have this thesis of like this evolutionary view of how this kind of is going to happen. And so just want to lay the landscape here for you. And maybe you can just give us some high level context of your thesis as far as what is happening in the tokenization market today.
Definitely. So two things. One is that, as you know, this is not a new topic. This has been something that the industry has trying to do for over a decade. And so from Tether and Circle launching, that was like 2014. And so a lot of things kind of went right around stablecoins to get to where we are today. And so my claim is that RWAs are way more broad than just a tokenized asset. It also says stablecoins are a type of RWA. And I make the claim that the order of operations of adoption of other RWAs will generally follow those that have the characteristics of what made stablecoins attractive in the first place.
Got it. Okay. And that is that attractive nature of stablecoins, whether it being the 24/7, the global access, the efficiency, the cost, the speed, all of these things.
All those things. Other things to mention, fully transferable, generally a relatively high quality issuer, roughly US government. Short duration, I think, is particularly important. It is highly liquid, basically instantly redeemable. And so you can start to look at the landscape of RWAs, which I consider them to be both financial assets and physical assets, and you could start to map which ones actually resemble those properties. And I think that is going to be the thing that makes on-chain capital and off-chain capital going on-chain most comfortable to kind of like allocate to.
Got it. Okay. And then in this, you've kind of formulated a taxonomy, and then we'll get into kind of some of the roadblocks and some of the kind of broader thesis here in the second and third order consequences. But I'm going to pull the taxonomy up on the screen here for the audience to have a look. And you kind of laid out, it's almost like a market map here for RWAs. And you have financial assets, you have physical assets as pretty much like the main two categories. And then there's subcategories here of private credit, debt, equities, funds, et cetera. Under physical assets, you've got commodities, real estate, collectibles, GPUs, et cetera. So you're kind of bucketing this into physical assets and financial assets. Let's start there. You kind of just explained about why did that make the most sense?
Yeah, I think it's probably unintuitive for a lot of folks to think about RWAs as something more broad than financial assets. And I wanted to call out things like, Pokemon cards. Like I consider those to be RWAs if the card is tokenized on chain. And so I think like that framing is also important when thinking about exactly what you're tokenizing. I think the other element is there's generally different properties depending on whether it's physical and or financial. And I think there are nuances that you need to think about either as an issuer or as a potential holder of these assets that I think has effectively like an impact. And so I really tried to like broaden the framing, which I think is important for folks to think about.
Okay, so some kind of like specific questions here about some of these categories. We had Carl from Six Man Ventures, and he kind of talked to us about this tokenization spectrum, and his thesis was basically like there's a spectrum of value unlock based on different asset classes that is more or less valuable to tokenize. So his thesis was basically it was almost like a risk curve, but it wasn't. It was more of like a liquidity curve. And on one side of this barbell, if you will, he had stablecoins and tokenized deposits being the most, one of the most valuable assets to tokenize. And then on the other side, he had another very liquid asset class being equities and like tradable commodities. And then in the middle, he had kind of like some of the things that you have here: real estate, venture capital, maybe GPUs, probably not so much, private credit, debt. Some of these much longer dated asset classes, things that mark to market once a quarter, twice a year, things that aren't so liquid. And so his thesis was that tokenization is far more beneficial to assets that are marked to market more regularly, are more liquid, and are basically traded more than the kind of assets that are far less like exchange. They're more of like buy and holds, or they're like longer term, less liquid, less like rather than a collectible, it's like you put a 5-year venture capital check in, you're expecting your liquidity in 5 years. Sorry, Dmitriy, one sec. And we're back, guys. I see in the chat, it froze for a sec, but we are back. And Dmitry, you were basically saying that you think it's a relatively fair mental framework, but in the way that you laid it out, it was a bit different.
Right. So what I'm saying is that there will be some assets that will be more difficult to tokenize, and a common misconception is that by tokenizing it, you remove the issues or the characteristics of the underlying market. And I think a good example of this is real estate. And there were many attempts at this and kind of making the claim that tokenizing a piece of real estate will magically make it more liquid. I don't think that this is the case. The other issues that we do see are things like private equities, where you tokenize, but there are a lot of nuances around transferability restrictions. This can be like ROFRs, it can be in the corporate charter or bylaws. And I think that there are those nuances that make it more difficult to tokenize. But I also think let's put it all on chain. I think there's still value propositions, regardless of the asset, that I think makes it valuable to kind of like have blockchains as this kind of like black hole or like sink for a number of different assets over the next decade.
Yeah, totally agree. And I mean, I'm going to ask you as well, kind of like how you think about what the second and third order effects of that. How do you position as an investor? We saw Standard Chartered put a 60x on Morpho or 30x on Morpho today, and they did the same thing with Aave last week. That's kind of been part of our thesis. But before we get into that, one category here that I think is particularly interesting is this GPUs tab. And so in this tab that I found to be something that's particularly interesting is tokenizing compute and then having like financialized compute markets. Just curious if you guys have done investing in that category, because I think a lot of what we've talked about and what we see talked about is like the access problem. Like, global investors want to get access to these assets. That's great. They can hold stables. They can, blah, blah, blah. But I think like what is really interesting is this next order of like creating new markets. Because we have 24/7 global rails, we have permissionless DEXs and perp DEXs, we can literally tokenize assets and create new markets instantaneously, which would require filings and ETFs and et cetera, in the traditional world. So when it comes to creating new markets, such as like the financialization of compute, and there's obvious reasons for this, hedging your inventory, or if you're an inference provider, you can kind of go long and short based on what you think the demand may be in a coming quarter. Talk to us about how you think about the creation of new markets as it pertains to kind of this kind of onboarding of RWAs.
I think it is fascinating. The dynamic over the next decade is absolutely this insatiable demand for compute. And compute, energy, I think those are all fundamental inputs into intelligence, effectively. We have an investment in a company called Odin. They're not tokenizing compute. They're more so aggregating heterogeneous compute resources for both training and inference. When I think about tokenizing compute, the first thing that comes to mind is what is the fungibility of the compute resource. Is in a 4090 fungible to an H100?
Right.
If they are not fungible, how do you start to build liquidity in these markets? And so I think there's a lot of known unknowns, but this is definitely an area we're looking at. And I think it's quite an interesting opportunity for folks looking to build something in the space.
And what about alcohol? You've got alcohol in here, which I anticipate is like actual booze. What are these companies doing here?
Companies are trying. They're I think a lot of this, I think the purpose also to kind of like broaden the landscape is to show that there's a lot of experimentation here. And so like things will break along the way. But there are attempts to say like what kinds of physical assets can we actually bring on chain? I think one example of one of my favorites, they're still in stealth, but they're and it's not a tokenized asset per se, it's a vault, but there's these low production oil wells in the US called strip wells. And these are owned by small like families, mom and pops in like rural Texas. And they don't have enough money to upgrade these wells, but if you do put some CapEx into it, you could 3-4x the production. And it's often an overlooked sector for traditional private credit firms because they're simply too small. But the nice part about using, blockchains and these kind of like global capital rails is it gives the ability for capital to flow into opportunities that might be overlooked by traditional capital markets. And, they ran a few pilots. They are roughly looking at 55% return over a year. And that's quite attractive. And I think I also have this concept called like the yield fairy. So it's not real. There is no free lunch. There's always like implicit risk in what you take. And you need to think about, are you seeing this opportunity because they could not have sourced that capital off chain, or is there actually an important reason why it's enabled by blockchains and stablecoins?
Yeah. That was always the question is like, all right, we're going to tokenize this, but then what, and why, right? And I think that question is starting to be answered, right? Because you can see like, even just if it's just, you can trade the 24/7 version of it on perps, or you can trade it on spot. Okay, then that's why, and we haven't even gotten really to like the DeFi primitives enabled around like tokenized equities, for example, or tokenized funds or commodities. And so in this, you kind of have this like waterfall here. Stablecoins started it, and then it's, going all the way down to stocks, funds, commodities. And this is part of like your evolutionary thesis, which we also firmly agree with. We've been saying, we kind of describe it as we started with very high quality, non-speculative assets. So that's stablecoins, T-bills, et cetera, deposits, and then when you move all the way down into, you've got asset-backed credit, and then you get into tokenized equities, and then commodities, and then private credit, and it's kind of like this risk curve evolution from our perspective in terms of speculative versus non-speculative, and so that's kind of how we've been framing it. It's kind of similar here, but I think your idea is a little bit different, and so maybe you could explain the nuance in your take, and then also get into some of the obstacles to adoption that you've been seeing.
For sure. I mean, I think you framed it well. I think it's along the risk curve. I also think it's along the duration curve. I think that's another, very important property. I think that you will have additional utility that kind of is a forcing function for folks to adopt this. Like you said, 24/7 trading for equities. Very important. I can also imagine once you have more of these equities actually tokenized on chain, you can start to be a lot more creative in the portfolios that you're creating. And so I look at this as almost like financial like personalization, I suppose, at a cost structure that traditional brokerages simply cannot offer. Maybe you want an index fund, but you want to exclude certain assets. There's like fascinating agentic type use cases that you can also start to plug into this. And so I think we'll see a lot of that. And of course, things like leverage and looping, I do think makes even relatively less volatile assets like corporate and sovereign debt a lot more attractive. And there's obviously a lot less risk of liquidation. I think in terms of the challenges, there's probably a few things. One that is most top of mind is around secondary market liquidity. And so as we start to expand the duration, say like vaults start to have, like 3-month lockups, then 6-month, then 1 year, then 5 year, there's for sure going to be capital that is okay with that. But I think what you want to have is strong secondary markets that can like take that if a user chooses to exit. This can be either the issuer offering a partial redemption, or it can be market makers that step in and agree to take that duration risk for some amount of return. I think there's other things where we can just get better at around, curators, just like doing better around reporting, risk management. I don't want to call them fiduciaries, but I do think that they have an important role in the ecosystem to make sure that the capital of users is being allocated properly.
Yep. They almost are like RIAs. You don't call them that right now because they are still waiting for kind of the SEC ruling, but they are very, very, very similar. So just kind of zooming out from the nuances here, from the physical and the financial categories, as well as just thinking about this kind of speculative adoption curve. We've been just formulating this thesis that we're so early to this kind of broader spectrum of tokenization. RWAs on chain, I think, are like 30 billion. Stablecoins are like 300 billion. We're thinking to the tune of there is about 100 to 250 trillion dollars of assets that are likely to be tokenized, let's say in the next decade, maybe 2 decades. And in the next 5 years, we're looking at maybe 10 to 20 trillion dollars. So we're looking at like orders of multitude larger than the current total crypto market cap. And I'm thinking many of the top 20 assets will be kind of like these real world assets in the future. We have figures HELOC already in the top 15, and I think we'll see more and more of this kind of happen. And so when we start to think about the second and third order effects of this happening, the thesis that we've just been constantly reshaping on the show is who is the biggest winners here? From the investor's perspective, that, or you have high confidence, right? That there's going to be this massive onshoring or on-chaining of this capital to our home base here. Who wins? Which protocols wins? Which primitives? Which companies? From the investor's perspective, from the entrepreneur's perspective, how do you allocate and think about investing in outliers, if the tokenization thesis is correct, who wins?
Yep. I think first and foremost, individuals win, right? Like blockchains, public blockchains are democratizing technologies, and it allows you to distribute financial assets at the scale of the internet. And so there are many capital markets where people do not have access to high quality assets. And this really, I think, is an engine for economic prosperity. I think that is an incredibly important point. And I am not a judge of PMF and things around speculation, but I think if you're just able to have people around the world just be able to, own a share of NVIDIA, US sovereign debt, still relatively high quality, I think that actually does a lot in terms of prosperity there. I think the second point is that there are companies like Robinhood's where they are new relatively in the context of financial institutions and they're moving quickly. But I also think there's a new class, what a lot of people start to refer to as like neo brokers that start to penetrate markets, and they can get there a lot quicker because of the non-custodial nature of things, and they're able to distribute assets in those local jurisdictions in a way that those incumbents cannot. I think the third is the opportunity for high quality issuers. I think about like the BlackRocks of the world to expand market share, because again, you are effectively providing access, and the products that have the greatest access generally have the highest quality issuers. There is an opportunity, I still believe, for new kinds of issuers and novel kinds of financial products. And I think that's more like a democratizing like capital markets function. And so what I personally like to look at is how weird is it? Like how unique is the kind of like access that you're offering? And is it something that the market just cannot get access to? Because if it's not weird, then it's BlackRock. And I think that's totally fine. But from an investment perspective, I like the weird stuff.
The esoteric things that are too small maybe for these large firms or issuers to touch, but have like a very unique value proposition when you enable different, when you take the enablement of the on-chain economy and you take these products, it's kind of this really interesting opportunity that these larger firms may not pay attention to, but with the knowledge that, you have on how it all works, and then this new kind of esoteric product that creates an interesting opportunity. Interesting. So those products might win. Those funds, these oil companies that you speak of, these kind of more like perhaps underinvested companies may perform well if the on-chain economy can unlock like. You had a great example, right, with like sovereign debt and things where it's like very boring, very safe, decent yield. But if you can juice that yield without really amplifying the risk much, then all of a sudden that product, the risk to reward becomes asymmetrical.
That's right. Absolutely.
Yeah.
Spot on.
Interesting. Dmitriy, thanks for your time. Thanks for the article. I thoroughly enjoyed reading it. I have the attention span of an ant post AI, so I had to put it through an LLM to actually get it through my brain. But I did great. It did great. And thanks for coming on. We're just so bullish. We feel like we're so early on this, and the constant question that we're asking ourselves on the show and asking guests and talking through is just like, okay, then like, how do we put our money in places to be like, how do we express this view? Just constantly trying to learn how to express this view. And so, it's honestly not an easy question. Like Securitize is going live on the NYSE tomorrow. Like, is that a buy? I mean, I don't know. It's already at the bills. So like, we're kind of retail. We're kind of like, all right, I guess it could be a buy. Stable coins is also hard to express a view on. Perps, obviously, you have Hyperliquid, lighter, easy to just buy for anyone. But the others, tokenization and stable coins, you could argue Ethereum, you could argue some for Solana. And then it kind of gets a little bit hairy as to like how you allocate or express that view outside of the private market. So
yeah. And remember, it need not be a token or a piece of equity. Maybe it's another way to earn yield as part of a broader portfolio strategy. So a lot of different ways, I think, that we're allowing the markets to kind of express the demand. And I think we've made a ton of progress, but I do think we're still early, and I'm spending most of my time in this place and on this sector. So incredibly bullish.
Beautiful. Well, we'll let you get back to it. Enjoy SF as well. And we'll talk to you soon, man. Go USA tonight, all right?
Thanks for having me, man.
Yes, sir. Bye. All right, guys. Are we up? Are we like, what's good? Can we get the screen, please, on there? Can we please get the screen up real quick? We're just going to leave you guys here for a sec after that. I mean, guys, we've been talking about that category for a while, right? Like we just are going to consistently find ways to express that bullish view. Expressing that bullish view is the number one challenge and the number one way that we're going to do well in markets for the next couple of years. How do we express the bullish tokenization, stablecoins, and perps views? What's the best way? That's the question. So I'm going to leave you guys with this for a sec, and I'm going to take a little breather. So enjoy the chart. Maybe we can just make the chart the whole screen here, and we can just do a little. Waiting for this breakout to confirm on the 1 minute chart here. Yo. Gentlemen, ladies, gentlemen, welcome to the party. Yeah, I mean, looks pretty good. I would say it looks pretty damn good, guys. I would say we got that sweep last night that we were looking for, and I think it looks good. Hype's just like not showing the same strength it did, but I think if we reclaim 65 on a Bitcoin move back above this, so like this MA has been killing Bitcoin, right? It like hasn't really, we haven't traded above this yellow line for a while on the 1 hour. On the 4 hour, like we haven't traded above this purple line for a long while. I mean, barely here, right? So these are all like somewhat significant. Like they're pretty significant, right? I mean, the 1 hour is not nearly as significant. And then on the daily, it's like we got a lot of work to do, right? So, I mean, we'll start with this. We'll get above this first one, and then we'll, try to attack this next one. And then same with these others. And so for Hype is clearly just hanging out in the middle. Like Hype's structure is way different. You know what I mean? And so same with Lighter. Look at that. Oh my gosh. This thing is unreal. This thing is unreal. This thing is unreal. All right, guys. We're going to break. Whoa. Yo. What? Yo. What? Bro, did Lighter just make that announcement? Oh my God. Bro. Yo. Wait, what? Is that not real? Dude, it's fucking, that chart is not real. Oh my God, what happened on Bitstamp? That's not the token. Guys, we're gonna get Henry McPhie, the co-founder of Streamex, up here in just an absolute moment. Lighter just bounced super hard. You guys saw that, right? We saw a God candle live. Yeah, but I don't think it was real. I think Lighter's trading at $1.90. Why is Bitstamp got it at $2.80? Dude, what? Man, this is just how we know we're still like so early in this market. The inefficiencies are just ridiculous. Like something's gonna come out about that. That doesn't just happen. All right, guys, let's move on from the charts. I don't know what's going on out there, guys. What the hell was that? All right, guys, we got Henry McPhie, the co-founder of Streamex. They are executing hard on tokenized commodities, a gold, one-to-one physical gold-backed yield-bearing tokenized security. It's kind of following up on the conversation that we had with our friend Dmitriy. And they launched February 2026. You get paid an APY monthly in extra gold via leasing out the gold. They had $14 million in AUM in Q1. And they distributed a bunch of yield as well. They also have partnerships with T0 and more. So again, on the tokenization trend, guys. Wait, dude, I'm still so... Okay, yeah, look at that. Back down to 1.93. All right, I'm not using that Lighter market anymore. Let's get Henry up on the show. I did not mean to go on a Lighter chart God candle run there, but you saw what happened, so I don't really know what happened there either. How you doing, Henry?
Good, man. Good. That was a crazy chart. I was watching that as well.
Never seen a God candle live. Good to have you on, Henry. Would love to just hear a bit of your background, being a co-founder of Streamex. We are very, very big tokenization bulls in the show. I've been talking about it and just kind of exploring the idea quite deeply. So, who's Henry? What is Streamex? And what is your kind of broader vision for what you're building?
No, amazing. Thanks a lot for having me on. To give a quick intro on myself, like I said, my name's Henry McPhie, co-founder and CEO of Streamex. Our focus is really on commodity asset tokenization, and so we've been operating the space for almost 4 years now. We went public last year, and so we're traded on the Nasdaq right now under the ticker STEX. My background itself is much more focused sort of in the digital asset space. Have been in the industry for a number of years, everything from NFTs to I just had a software development company doing early stage tokenization stuff on the Solana and Ethereum ecosystem. And I also have a mining engineering degree. And so what Streamex is really is sort of a mixture of all of those and bringing commodities on chain and really innovating within an industry that traditionally does not really see a lot of innovation. And so our first asset, sort of flagship asset, is GLDY that you touched on. It's a gold asset that pays you to hold it. And so really turning gold from an unproductive asset into a productive one and sort of getting rid of that pet rock theory where, if you have an ounce of gold and you wait 10 years, you'll still have an ounce of gold. Now with GLDY, you actually have the ability to get paid and get a yield from gold itself.
Yeah, that's amazing. And that process is done via leasing that gold out to other storage facilities, other merchants. Who's kind of the counterparty on these loans?
Yeah, so the yield itself is generated through, like you said, something called gold leasing. This is a market that's been around for a very long time, but traditionally has only really been available for large institutions who wanted to do it. And so the simplest way to think about it is you have gold, and Streamex, we have gold. What we do is we rent that to manufacturers, companies, and large institutions that are using it in their processes as working capital. And so a good example would be a jeweler. And so a jeweler, for example, they need to make a lot of jewelry with gold. What they do is they would essentially rent or borrow, lease the gold from us. They pay us to be able to do that. We insure everything on 2 levels, from Allianz, Lloyd's of London, two of the largest carriers in the world. There's a full credit underwriting. There's a lot of security that sort of goes into the process. And we also only lease to large companies like, for example, our biggest client is a $5 billion jeweler who's publicly traded with 7,000 stores. And so they pay us to be able to use the gold. They have the ability to turn into chains or rings or whatever they want to do. And we're able to pass that yield essentially and what they pay us to use it for on to our holders while keeping title of the gold the whole time. And so it really is turning gold from an unproductive asset that sort of just sits there and actually using it and giving people the ability to get that yield while keeping the underlying exposure of the asset.
Yeah. And I mean, gold had that insane run, right? Like it was in January, it topped out at like 4,700 or something. And
Yeah.
I think that as this kind of like fiat debasement theory continues to run, people will want to have the ability to get exposure to gold and then have it in its kind of tokenized form. Obviously, yield-bearing form is, a cherry on top. And so, when you're thinking about the expression of this kind of gold thesis and this kind of fiat debasement thesis, who are the people that are using Streamex to get this extra yield? Is it like the average gold bug? Is it like other kind of more sophisticated, younger retail investors? Is it firms and funds? Who, because owning, like, for example, I own a bunch of gold, some of it is in like a safety deposit box. Some of it is like in undisclosed locations. And it's kind of like that thing for me where it's like, it's just there. Like, it's like a stable, unfuckwithable asset. And, even the concept of like taking any risk to earn yield on it feels a little bit strange to me. And so who is the user base and how do you kind of think about expanding that investor base as you guys scale your AUM?
Yeah, no, it's a great question. And I think the way that we look at it is there's sort of 3 main pockets of capital that we're working with right now on the distribution side. And a really good example of a gold-backed asset that is probably the most popular in the world is obviously gold ETFs. And so like GLD, for example, GLD is the largest gold ETF, around 180 billion in assets within there. And it's an asset that tracks the gold price, but it costs you essentially 40 basis points every year to be able to hold it. And so when you think about it, you can't redeem an ETF for physical gold, really. You can sell it and it's liquid and it's easy to use. But now with GLDY, you still get all the benefits that you would get with holding an ETF, but you actually get paid to hold it. And so there's almost a 4% delta there. If you're thinking about what asset should I own to be able to hold gold, you can own the GLD ETF where you get gold price minus 40 basis points, or you can own GLDY where you get the same gold price exposure, but plus 350 basis points with the yield itself compounding in additional gold every single month.
Yeah.
And so when we look at the sort of the interested parties who are we're working with on the distribution side, we announced a big partnership yesterday, actually, with a group called, or on Monday, with a group called Siebert. And so Siebert Financial, they're an investment bank and wealth manager. They have around 20 billion in assets under management in their wealth management division. And we're actually working with them as the first tokenized product and tokenized security that they are bringing to their network to be able to sell through their brokerage network. You can hold it in a traditional brokerage account. And it's really sort of, when you think about the bridging of TradFi and DeFi, this is that really in practice. And so that's a big group of investors and people who are traditional investors who want exposure to gold. Now we're giving them the ability to get exposure to a tokenized version that pays you a yield, which is really exciting. When we look beyond that, we're also working with a number of RIAs and IRA custodians too. And so RIAs, investment advisors, groups that have pools of capital where people deposit, they are looking for gold exposure. IRAs, we announced a partnership with a group called Equity Trust, giving the ability for you to hold your GLDY in a IRA account, so tax efficient account in the US. And then we also work with a number of ETF providers and then just general accredited and high net worth investors who want gold exposure with a yield on top of it. And so our biggest focus really is on expanding distribution. The Siebert announcement was a proof of that, and really excited to be able to show how that grows AUM and grows essentially distribution for GLDY. And so that's how we look at it.
Yeah. And then when you think about the actual monthly yields, are you guys paying those in additional gold holdings to the people's underlying?
Yeah.
Got it.
So,
and can you choose to get that dividend essentially in cash or gold, or is it just gold?
Yeah, so the dividend right now is paid in gold, and so you essentially get additional GLDY every single month, which is additional gold. You can actually sell that GLDY. You can sell it on the secondary market to be able to get cash. And so if you want, and say you get an ounce of yield 1 month, you can go sell that on Orca or on T0 or any of the other exchanges that we work with and get your USDC or cash, and then have that as a cash denominated yield as well. There will be a point in the future where the yield will be paid in cash, but right now yield in gold is a pretty good one for people.
Yeah. And then thinking about, obviously, this is the product, here's the offering, here's what we do. But thinking about more broadly about like the macro tailwinds behind gold, right? There's, as an entrepreneur, you take bets on where you think the world is heading with your capital as an investor, and then as an entrepreneur with your time and your career. And clearly you have a directional view on gold being an asset that people are going to want to continue to own. Maybe just talk us through why you are taking this kind of career bet in terms of the time and the effort and the resources, and what kind of like the macro tailwinds are for gold as an asset that lead you to believe that this is going to drive asymmetric returns to your business as well as to the investor base.
Yeah, no, it's a really good question. And I think when we look at it, whether it's gold or other commodities in general, I think the commodities market as a whole is poised to grow exponentially over the next couple of years. I think the gold market, especially when you look at the sort of the world right now, and you look at the different macroeconomic things that are happening with inflation, currency debasement, all these sort of headlines that you see in the market. Gold itself, it had a massive run obviously over the last 2 years. It's pulled back a little bit now, but I don't think that that run is stopping anytime soon. I think when you sort of look at everything that's happening, gold is something that 100% everybody should have in their portfolio. And I've seen things, people talking about it, growing it from a 5% allocation to up to a 20% allocation in gold to be able to hedge against a lot of this uncertainty that's in the world. And so when we look at gold itself, I think gold is a great bet over the next couple of years and even beyond, as it has been for the last 50 years, even longer. And I also think when we look at commodities in general, I think there's so much so much benefit to holding commodities and investing in commodities just because of everything that's coming. Copper, especially, silver, gold, they are great assets to be able to hold.
Yeah, yeah. And are you a believer in this kind of like fiat debasement idea as well? Just like the denominator is worthless, so like buy Bitcoin and gold. That's like the Bitcoin bull thesis, right? In a nutshell, do you feel like gold bugs see things in a similar way? Sometimes they can be even more doomer. They can be even more doomer.
No, I think to an extent. I think there's the far end of the spectrum where everyone's like, either own Bitcoin or gold, the dollar's going to zero. I think if you look at it over the last 50 years, the dollar, especially the US dollar, has lost obviously a lot of its value. And so when you see gold going up, gold is denominated in US dollars primarily. And so when you see gold going up, that doesn't necessarily mean that the price of gold is going up. It means that the price of gold denominated in US dollars is going up. So the US dollar is going down. And so if you want to actually hedge against that, and you want to hedge against inflation and earn an asset, gold returns over the last 50 years, an average of 8%. Gold is a great hedge against that. And so same thing with Bitcoin. I think Bitcoin's also a great asset to have, maybe a little bit of a smaller allocation than gold, just because it's a lot more volatile depending on your what you want to do with your portfolio. But I think overall it is something that there's a wide end of the spectrum. I think I'm probably more in the middle. I think the US dollar is going to continue to go down in value just because of inflation and the amount of money that is being printed and the debt and everything like that. That's why I think gold is definitely an investment that people should hold. And like I said, with having GLDY and earning a yield on it, you get an even better return profile. Yeah.
And then when it comes to the yield part, just kind of closing up here, what is the risk that I'm taking by holding GLDY? Are these loans like fully secured loans with these counterparties that you measured? They're insured by, for example, Lloyd's of London, et cetera. What is some of the tail risk that I'm taking as far as like worst case scenarios go?
Yeah, so when we were creating the asset, the most important thing for us was to be able to make it institutional grade. And so work with the right partners so that those risks are essentially mitigated. And so when we look at it and when we're looking at gold leasing, one, the counterparty itself is very important. So there's an 18-step underwriting process that we go to be able to actually pick the counterparty who gets the gold on lease and pays us back. That's why we only work with very large companies to do that. The second piece is if the gold there ever is an issue, it is insured. And so, like I said, we insure it on 2 levels by Allianz and Lloyd's of London. Yeah. On top of that, we do daily spot checks. The gold is RFID tagged, so we know where it is at every point, and we can go get the gold at any point if we feel like there's an issue with the lessor. And so, there's a lot of it has been mitigated. There's a lot of steps that go into making this process efficient and also making it institutional grade. And so when you think about it, that Streamex, a public company, is underwriting it. We are working with these groups to make sure that it's safe and efficient and like I said, an institutional grade product.
Love it, Henry. Well, congrats on the growth of the AUM. Congrats on the growth of the product and of the idea clearly getting traction. I think gold has had a bit of a pullback this year, but I mean the breakout from the last massive range that it had into now, we're clearly in now what is going to be like a decade-long gold bullish trend, I think. And so I anticipate more investors kind of pivoting into gold and other commodities, which hopefully has a direct correlation to the success of Streamex. So wishing you the best of luck. Thanks for your time. And I know you're busy, so we'll let you go and keep at it, man. It's like Sisyphus, man. We're pushing the rock up the hill, and sometimes we get some pullbacks, we consolidate, we go back up again. And so, we're in the bottom to middle section of that hill now on gold, and we're gonna. I mean, I'm a long-term holder here, so I'm just hanging on.
Amazing. No, thanks a lot, Andy.
Thanks, Henry. All right, buddy. Gold Guys, I am a gold bull. I am a gold bull. I bought gold after the 2022 bull cycle, and I never really thought about earning yield on gold. Like I've never thought about how that actually works, or if that's something that is actually going to like catch on. But it seems like it is. I mean, they have a ton of AUM. They have a ton of actual, demand products that people are using. So it's definitely working. It's definitely working. Guys, I cannot believe that we saw real time, like some absolute market making shenanigans on Lighter. Like, what even was that? I don't even know what that was. All right, guys, I'm going to pull up some of our favorite ecosystem charts here and cruise around for a bit. Checking on Per. Still, that MNAV is super low, guys. Super low still. I still think that has a lot of room to grow. I think it has a lot of room to grow. I don't know why it would be so low. I think Sailor, honestly, MicroStrategy is kind of just like killing the DAT trade. So as we kind of said, guys, strategy's fine. I mean, we still have this level that it's going to retest. We'll see what happens there, but it's fine. It looks fine. Stretch. Dude, guys, our bull thesis is playing out. Our bull thesis is playing out. Our bounce thesis is playing out. Our bounce thesis is literally just stretch back up into this range. Like, it doesn't even need to go to 100. Just get back in here and we can have some relief. I mean, if this thing gets back up into the high 90s, I think we bounce super hard. Super hard on Bitcoin. If it just gets into the low 90s, I think that we get a nice bounce. Did you see Drift has rebranded into Velocity? I did. And I also saw that the announcement was literally written by ChatGPT. Like, how do you do a product and a massive rebrand following your exchange getting absolutely hacked and your users getting cooked, and then you do this?
Embarrassing.
Velocity is the exchange you've been building toward. M-dash. A cleaner architecture, a stronger security foundation, and a clear sense of what the platform is for. The name carries that intent. This was definitely written by AI. And so, as a human, when you see this stuff, you're just like, do you care about your users? Like, I don't want to be negative. Like, I really don't want to be negative. I hope they figure it out. I hope that they, get the transition done, that the users are made as whole as possible. But like, this just shows like a lack of care, in my opinion. We need clarity badly for the institutional money to come in. I agree. No way. Are you kidding me? Seriously? Not going to make it. I agree. Not going to make it. Rocky, Rollup. Good to see you, buddy. What's up, Rocky? Freedom Guy's crying. Yeah, I agree. Yeah, so I didn't think that was all that. I didn't think that was really great. Something's happening on Hyperliquid right now with the priority fees. Something's happening. Something's happening. Something's happening on the priority fees. I don't know what's happening. But for some reason, the priority fees on Hyperliquid are drastically increasing. I don't know what it is. It's good to also to see HIP4 volume continuing to grow. I mean, it's nothing crazy. We had a couple good days, but we talked about how this is an additional kind of thesis here. I mean, $3 billion burned. I mean, you see Sol start to kind of creep up here. Like, it's very zoomed out. But look at this. Sol's actually outperforming Hype on a 30-day basis. Previously, Hype was outperforming everything. See that? Sol's actually outperforming Hype on a 30-day basis. Obviously, when you zoom out, it's a lot different. But it's outperforming it 30 days. And today. What is Sol up today? I mean, Ansem is just going all in on just bringing this thing back. I mean, Sol's up 5% today. I mean, Sol is touching the most important level it's had on the chart for a while. Like, I mean, look at this. Like, it needs to hold this level. I mean, this is it for Sol. I mean, this is probably a good signal for the rest of the market. Right? Like, if that line can get flipped and this isn't just an instant short, I think the rest of the market has some legs too. You know what I mean? But this line is just, it's going to be hard. I mean, there's 1, 2, 3, 4, 5 touches, 6 time it broke under. It's going to take a little while. But like the bull thesis to be early to Sol, well, you kind of missed it. It was buying down here. But what you're looking for is like something like that on Sol. That's like the bull thesis. Reclaim and go. I think it's possible. And if this happens, I think the whole market sends. I think Sol has that effect on the market. Like when Solana's pumping, it's risk on. That's kind of my barometer as well. When Solana's pumping, it's risk on. That's my barometer. Hype? I don't know, man. I just zoom out on Hype. I don't really try to do much TA on this thing. Sol has to get back over 100 before you can get excited. Yeah, I agree. Graham getting list on Nance tomorrow. Oh, that's Telegram's coin. Pretty good spot around 1.54. Robbie got yellow fever or what? Hope he's okay. Dude, Robbie's in Machu Picchu today with his girlfriend. Guy's leaving us to the stream, huh? Leaving the boys to hang out. We're investing a bunch into his studio for you guys. Got a whole new sign, new cameras, new lights, new everything. It's gonna be great. When he gets back over the coming week that he's back, it's gonna be great. But yeah, guys, I mean, I don't really have much here other than looks good. Looks good. Close over 60 today, or 65 would be fantastic. This got a really nice bounce. And this is the daily close above 60 is everything to us right now. Everything for Bitcoin. So, stocks, I mean, these things are just unreal. Like, unreal. Man, Pengu, man. Damn. We did early stage investments in Pengu. And it just, we never got to sell up here. Now we're just waiting for the next bull run if we get like a meme coin bull run. Pump. Up 4% today. I mean, it's definitely trying. It's definitely trying. I don't know what happened to Sky, man. Got smoked. Fundamentals did not change, but it got smoked. Near's holding on. Near probably looks pretty good here if we get a broader turnaround. I think it could have some pretty strong moves. I can't believe we saw that lighter candle. Lighter looks amazing, man. Unreal. Unreal. Completely unreal. So, the Pengu community is still strong. Yes, I agree. All right, Robbie's okay. Whew. Yeah, he's okay. Don't you worry. Don't you worry. Pump still needs to deal with a lawsuit. Gotta wade through the BS. Everything is highly manipulated right now. Yeah, I feel you. I feel you. I think we're looking good though, guys. Guys, we've got a very interesting guest. Yes, we've got a very interesting guest, Amos Meiri, the co-founder of AntSeed. He also co-founded Color Coins in 2012, one of the earliest projects for issuing digital assets on Bitcoin. He later co-founded Node Capital and is the co-founder of AntSeed AI, the peer-to-peer open market for AI inference, which we believe is going to be probably which is becoming the most valuable part of the entire AI stack. We're gonna take a super quick break and we're gonna get Amos up for AI Supercycle episode number 40, live from the financial capital of the world. Be right back in just a second. Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Alrighty, guys, welcome back to AI Supercycle, episode number 40, our premier weekly AI show powered by our friends at Near. Visit near.com for one of the best portfolio interfaces in all of crypto, as well as near.ai for their private inference product. Today, we've got Amos Meiri talking about the AI inference explosion. Amos is a longtime crypto builder and investor, was one of the first builders on Bitcoin with colored coins, and is now the co-founder of a company called AntSeed, which is an open source peer-to-peer marketplace for AI inference. Amos, welcome to the show. Good to have you, buddy.
Thank you, Zev. Thank you for having me, man. Super happy to be here.
Of course, man. Of course. So we've kind of seen the iterations of decentralized AI happen. We saw this iteration of decentralized training, compute, and inference about a year and a half, 2 years ago. Then we kind of ran through this like agentic framework with like these different forms of agents on chain, as well as having like X accounts and meme coins associated with them. Now, then we've gone through GPU-backed stable coins like USD AI, and then now we're quite firmly in this open source AI era, where the CEO of Anthropic is saying that open source AI is progressively moving in a very scary direction, and it's something that the US is also trying to onshore. Through this, there's been a persistent demand for compute across the board. We've seen memory stocks fly, we've seen chip stocks fly, semiconductor stocks fly, and through this, there's been a kind of new golden goose, which is inference. People are realizing the value of inference in the AI stack as being the most valuable part of the stack. And so in today's conversation, just want to understand what is happening at the inference level, why it is so valuable, what AntSeed is building, open source AI, and more. So maybe, Amos, you could just give us a start of what is inference and why is it catching so much fire and traction in the AI world as being the most valuable part of the AI stack?
Yeah. All right, so many things to talk about, but I'll start first. For you mentioned like the crypto and how it evolved and the terrible meme coin period for crypto, which was very hard for me seeing being in the space for now almost 14 years. So yeah, I'm very happy to start seeing actually things that make sense in crypto. And for me, it was a very long journey, but I got really excited about AI just I would say a year ago, something like that, and really went deep into understanding where crypto and AI could actually work. There are many places that I think they won't, but we can talk about them. And yeah, and like you had a lot of different attempts in stuff that were early, like for example, think about Akash and project like that
Yeah.
that were very early to market and now are booming, which is very, very nice to see, people holding for that long and building something that is actually meaningful. And inference is yeah, I guess one of the hottest topics because it's kind of like the new oil, right?
Yeah.
Um, there are basically two type of works, I would say, in terms of AI. The one is like the training part, and the other part is the inference. The inference, to very simplify it, it's like when you're talking with ChatGPT, Claude, whatever it is, that work that the AI, the LLM is doing is basically the inference. So you're paying for that service, that compute. And I look at inference really like the new oil because, if you look at airline companies, if they're we're hedging oil prices because that's their biggest expense. What we're going to see is that inference is going to be one of the biggest expenses of the new tech, the new company. So as we move forward, this market is going to evolve a lot, and we'll start seeing, stuff. And I think we're already starting to see that, like people looking at hedging inference prices, and you have Venice doing also something interesting in this intersection with DM, which we can talk about as well. So yeah, I think inference is going to be a big theme, something with basically endless demand. If only like 5 or 7% of the population is paying for it, think about what will happen when we'll have more and you will have robotics, and everything will use compute and inference.
Yeah, yeah. And so, just a way to kind of classify the value of inference when you're thinking about using these tools, when they are like writing back to you, like, oh, we're thinking, that is the inference. You're producing tokens to get an outcome that, like, a response to your prompt. And so the inference explosion, or the bull thesis for inference, is the demand for tokens. Is that the right way to think about it?
Yeah, yeah. I mean, it's basically when people say the demand for AI, what they mean is actually the demand for that. So yeah.
Yeah. Okay. And right now, the token production is, growing exponentially, right? Like the amount of tokens being used on a day-by-day basis across Frontier Labs is growing exponentially. And there is kind of starting to be this financialization of the AI stack, right? Like we've heard about these compute markets being available for data center owners to hedge their inventory, or for different AI programs to kind of think about going long or short on the price of compute based on what they're seeing in their internal data. And so we're seeing like simultaneously the growth of both inference and compute demand, and then also the financialization of these markets to create like the best fair market value. How do you think about what is happening right now with the financialization of the AI stack?
I think we're really, really just starting, right? We're really just starting because, I sometimes it's really funny to me because I look at the AI space like in general, and you had like GPT and everyone were using GPT, like, I don't know, Bitcoin. I really like, I can compare it to blockchains, right? And people think like, yeah, that's going to be like the main thing. And then you had Claude, you had some others, Gemini, et cetera, et cetera. And now what we're seeing is basically a boom of so many different models. And I think this is just going to increase. we're going to have also sovereign like countries, having their own intelligence. That's a whole new, by the way, competition and that's happening behind the scenes for sure, right? Like that's going to be a very big intelligence war, between countries having their own proprietary intelligence. Is going to be the most lucrative and important thing for a country, in my opinion. But anyway, so you have all of these models and endless possibility where inference prices are going to be also pushed down. And in terms of the financial part, it's really, really just starting. Yeah, it's. I see some, different applications. There was a big company, I forgot its name, that kind of like raised now for doing futures and some derivatives on top of that. I forgot the name. So yeah, it's just starting. It's going to be a very interesting space to be in. Was actually also what kind of like turned on the idea of starting AntSeed. Yeah.
Yep. Okay, so maybe we can just get into then what AntSeed is. For someone new to this, what exactly is AntSeed, and how does it differ from, platforms like Open Router and other kind of similar platforms?
Yeah, actually, the best way to explain it is to compare it, because people understand and use Open Router. Open Router is an amazing company. And basically what they're doing is they're connecting between buyers of inference of any type of model that there is to sellers, providers who provide inference, different models, etc. So it's a marketplace, right? People are looking to buy inference, and other people want to sell inference. And Open Router sits in the middle, basically, curates the provider. It's a centralized marketplace that basically control the supply, control the demand, and growing pretty fast. And AntSeed is basically Open Router without Open Router in the middle. Okay, there is no gatekeeper. There is no one who decides who is going to provide and what is going to provide, and there's no one who decides who is going to consume that inference. And the way that it works, it takes a kind of like an old idea, which is the torrent network, which, by the way, I think kind of like didn't work. It did work. It had millions of users, yeah, but because UI was very, very important. But in the age of agents, like, they don't care about AI, but we can get into it. Anyway, so AntSeed doesn't have anyone in the middle, and the exploration of the network happens on the DHT network, which is the same BitTorrent network that you use to download files from one another. It works in the same way. And the settlement and the agreements, basically, and the payment happens on the blockchain. And all of this thing is so decentralized and permission that when we went live just, I think, almost 3 months ago, at the second day, we had a provider. Like, we never talked with him. We didn't know like who he is, but it's someone who just, read something and connected and started to provide inference. So it's really like a truly decentralized protocol for that. Now already with after only 3 months with more than 1,000 active users, more than $100,000 in volume, and with the product that we're going to release, which we can talk maybe a little bit here, it's going to go very, very big. Yeah.
And then, Amos, maybe you can just kind of walk us through practically how like what the user journey looks like on AntSeed. So I'm a buyer of inference. I come to the platform and I can use the platform and I pay the seller in the marketplace. How does that work? And what does that process actually look like for those who are listening who want to try this out? What does that look like from the buyer perspective of wanting to buy inference to use, any LLM?
Yeah. So basically, you can find all of the models basically that exist. There are more than 1,000 different services, AI services. And what you can find there is, and the idea behind AntSeed, it's not only raw inference. Like you can have specialized inference, like skilled inference, or you can have even a router that you're paying for, a specific router. So it's any type of service. On the user side, the experience right now is a little bit still rough, and that's why, yeah, I'll talk about how it's going to look like very, very soon. But right now, basically, you download a client. You need to download the AntStation, which is a chat, client chat, which is kind of like a node as well behind the scenes. And you interact with the network through that, or you can use a CLI, or you can connect it to your Hermes or your Claw, like pretty easily. So that's how it works right now. You know, for someone who's a little bit technical, I would say that's an easy thing to do. The way that it's going to work a little bit like a VPN. So you download a client, like a very small client, just like a VPN, and you just click on, that's it. And you're connected to the network, and you can use whatever tool that you're already using today, if it's OpenCloud, Cloud, whatever it is, really, super easily. So the onboarding is going to be just like any non-crypto, non-technical product.
Yeah, love it. And then, so this inference market that you built is, still in the early days. You said, there's been $100,000 of volume, 1,000 users. It's kind of growing. These kind of more marketplace oriented inferences, like oriented marketplaces for inference versus kind of like the centralized providers. How do you see this divide growing in the future? What are the advantages of using something like AntSeed versus a centralized inference provider or marketplace? And how do you guys leverage blockchain rails, open source nature to kind of build a more dynamic and a better product from this, foundation? And then what is that kind of divide, and how do you anticipate these two separate paths playing out for the next 12, 18 months?
Yeah, so the idea is that open market creates competition, and competition creates better prices. That's the whole idea behind this open market. And we don't care how people are providing their inference, of course, as long as they're following terms and conditions and rule and everything. But they can run their own GPUs. They can they have credits to a model that they want to resell. They can do basically whatever they want on the network and provide inference. And if their product is good, then people will use it and they will pay for it. The main challenges on the network are basically two. One is, how you make it easy for anyone to use, which I think, figured out very well, and we'll release it pretty soon. And the second one is creating this trust layer, because when you have a decentralized network, there are people who are trying to do some tricky stuff, and it's not like we're a centralized platform who can do, stuff. We need to cryptographically prove that someone saying that he's selling, GPT or whatever model it is, that it is really what is selling. And we're using for that, for example, black box API fingerprints, which is it's a way to understand which model you're using, T at the stations, some different things. So that's kind of like the main challenge when you create something that is that open.
All right, so Amos, let's get into what our audience is really going to want to hear about, which is this ANTS token. There's a 1.04 billion token hard cap, no minting beyond emissions, no admin mint functions. The current supply is 55 million. 5.29% available. You're on epoch number 11. And there are basically emissions to track eligible real activity on the network. And so we've seen the success of Venice. We've seen how strong that token has performed, as well as just the actual growth of the inference token production, that they've done on a day-by-day basis. And so, you guys have generated a significant sum of revenue. You guys have a pretty good business model. I'd like to hear about that. And then I'd like to hear about how you're thinking about this ANTS token as it relates to this system. Because again, a lot of us, have been holding Venice and been bullish on Venice. We had Eric on the show in February when the thing was trading at like $1, and they were doing like maybe 5 million tokens per day, or sorry, 5 billion tokens per day. Now they're doing like 80 to 90 billion per day. And so, I think our audience would be very happy if this is a, Venice style outcome. Not, no financial advice here. What is the AntSeed business model? How do you guys generate revenue? And then what is the plan for the Ants token, and how can we get involved there?
Yeah. All right. So first disclosure, I'm also an investor through Node Capital in Venice and a big fan of what the team is doing, and super happy for them today for raising that amount. Okay, so basically, we decided to take a path where there is no conflict between a labs company and the network. So we're not going to have a company, but we're going to have a foundation that's going to basically help manage the network. And all of the revenues from the network are going back into the network itself through a buy and burn. So nothing goes basically to a company. There is no extraction of value. We want to create it in a very, very decentralized way. And that's the only way that I know. The first and easy fee is the network takes already 4% fee for every transaction or consumption of inference on the network. And that will go to buy and burn. There are other things that are going to happen in terms of fees. There are going to be more fees generated on the network. The token has two layers. The first layer we're going to release in a couple of weeks, and that layer the utility of the token is focused on the reputation layer. So we talked about trust, that it's hard to create trust in a decentralized network. Yep. So staking into a provider is one way to create that trust. We'll enable staking of the Ants token into providers, and the rewards will flow both to users who are using sellers and stakers. We also have another component into the tokenomics, which is verifiers. It's people, companies who's doing the work to verify the work on the network and the authenticity of the providers on the network. So that's the first layer. Is going to be up and running in the next couple of weeks. And the second one is the interesting one, which I'll talk just a little bit to give you the view. We're looking into building kind of like a liquid inference token on top of the Ants token. And the idea is that every time you stake the Ants into a provider, you're receiving an NFT. That NFT is going to trade, and it's going to be some kind of a bond to create that liquid inference token. That's the second layer. We're still working on it. It will take us time to release, but that's kind of like the utility of the Ants. But in general, like, we wanted to do it as like as fair launch as possible, and this is why we didn't pre-mine, didn't pre-mint, tokens. Everyone get the opportunity to participate, just like us. Yep. From day one, everyone get a chance to earn the tokens. We self-funded in the beginning. It's only me and Shachaf, my co-founder. So we're only two people. We're only now bringing on board another two people to the team. So yeah, like, super excited about everything that's coming, and try it out.
Yeah, and then on the revenue side, you mentioned that you guys are planning on having the revenue be directed to the token. What does that like monthly revenue look like right now?
Yeah, right now you just take 4% of the 100,000 that we generate. Yeah. But there are going to be other mechanisms. Like, for example, if someone is because you're locking, for example, your Ants on a provider for a period of time, and this period of time is like the strength of that position. If you want to move it, you will need to pay fees. There are some other fees mechanisms, so it's going to grow. We look at it as this protocol as a business. It's not, it needs to generate money. It needs to create value to the people who participate in it. Really like a win-win, not just saying a win-win. We're trying to create something that's truly decentralized and a win-win for all the players.
Yeah. Okay. And yeah, on the bond token, right, that you mentioned, this kind of NFT, in the Venice design, you have this DM token that gives you a guaranteed amount of credits to use on their platform, right? Is this bond token built with a similar kind of like a similar idea of this kind of guaranteed inference?
It's a little bit more problematic to do when you're in the same model because it's not one provider who's just deciding that he's going to provide the inference. You need to basically align a lot of different providers into accepting the same inference token. So the mechanism is going to be a little bit different, but I think the Venice mechanism is one of the most innovative mechanisms I see in the past 14 years. And by the way, like we have also the DM pool
Yeah.
where DM holders are able to pull into a smart contract. And this smart contract is a provider on AntSeed. So we have a Venice proxy provider on AntSeed, which is basically people pulling in their unused DM into a smart contract. And they're receiving basically the usage, all of the USDC usage, which by the way is growing like crazy on this provider. And they're receiving also, of course, ants as a rewards for that. So yeah, you can use basically Venice right now at 50% discount on AntSeed. Yeah.
So one of the things that you mentioned about the providers, right, where you stake the token into one of the providers' pools, how do you prevent providers from being bad actors with no central control, right? Given that it's like this kind of decentralized system, what rules do the providers have to maintain integrity in the AntSeed system?
Yeah, they don't have any rules because we can't create those rules. We can control it. The only thing that we can control is to kind of like create this trust layer and have the Wild West, right? Like the Wild West, we can control, but we can basically help users explore trust. And all of this trust layer is not like us saying, oh, this one is shoots or this one is like, you know, a non-provider. Like we have to cryptographically prove, you know, that they had a good uptime, that they provided the model that they said they're going to provide, you know, that their identity is their identity, like all of that. It's a little bit harder than just building a centralized platform, but that's why we're excited about it. And I think it could scale.
Yeah, and then just thinking about kind of like the market at large, how big is the inference market today? And you know, if we're talking about, you know, AntSeed getting a couple bips of this market to start, how big are we talking in terms of total token production? And, you know, what is the scale of this market that you're talking about?
It's endless. It's I think we're seeing now only that. Even if you look at the biggest player, I think this market is going to explode, like in ways that, you know, there is, I guess, an AI bubble. Okay, it's okay that there is a bubble because any new type of market like that, but it's also not a bubble, you know, because the demand to inference is just to intelligence is just it's endless. It's an endless. Yeah, it's infinite. So yeah, I think it's huge, and I think there is a place in the world for you know a truly permissionless inference marketplace where everyone you know equally can consume or provide. And I think also, you know, looking ahead, one of the interesting things is specialized inference because think about, for example, designers. You know, people who used to do UX, UI, and you know, websites and stuff like that, and they have like really good workflow for that, but they're going to be out of job, like most likely, right? In a couple of years. Like I think those people are going to develop their own specialized inference where they create their own workflow, you know, connecting to different models to get basically the best output. And in the future, people will not care if it's, you know, Opus 4.8, GPT 5.5. Like, you know, I need now legal advice. I'm going to get the best legal advice, you know, that someone can provide me. So I think the future is going to look a lot like that. And AntSeed is just, you know, open to that, and we already have some things like that.
Last thing for you from my side, Amos, what is the one big why for you for building AntSeed, and what's your boldest prediction for how these open source P2P AI marketplaces will evolve in the coming years?
So for me, it's, I've been to crypto for a very long time. It's very exciting early days of Bitcoin, was working with people like Vitalik on colored coins before
Yeah,
starting Ethereum and all of that. So seen a lot in the space, and I came there from really an emotional and a belief, in a new system and everything. And as time passed, things like meme coins, like sketchy token mods, all that, like really destroyed everything. I hate it. I hate what Pump Fund like did to our crypto market. I truly hate it. And and for me, it's like I invest in crypto companies through Node Capital. We run 3 funds, and I felt like this older generation, which seen a lot of things and have the experience and everything, need to step in again to start building stuff that are meaningful for crypto. And I felt like the intersection between AI and crypto is the right place for me. So that's
I
why.
love it. Amos, thank you for your time. And thank you
Thank
for
you
being a
so
part of
much.
AI Super Cycle episode number 40 here, powered by our friends at Near. Amos is building AntSeed, guys. You guys can check out AntSeed and their website. It is at antseed.com. You can learn about the Ants token and more, and everything that is going on with the open source inference marketplace that you guys are building. Wishing you guys luck as you scale and come into this launch, and appreciate your time, Amos.
Thank you so much, man. Bye bye.
Cheers, buddy. Boy, is this market going to explode. Boy, is this inference market going to explode. Man, we are so early. It is, we are so early to this inference market, and we are so early to this kind of tokenization market, everything else. So, guys, let's get into some of the final kind of charts, final things happening here in the space, and just have a quick look at what's happening. Because, yeah, what a day. What a day out there. Quick look around, guys, and then we're going to wrap it up here. Someone says Sky had a major investor move tokens to an exchange. They haven't liquidated yet, though. Is that why it's dumping? Interesting. Bitcoin looks fantastic. It looks fantastic on low time frames. It's the best we've seen Bitcoin look in a while. I hate this hyperliquid weakness, though. What are you doing? What are you doing? Lighter got dumped on that Robinhood news as well. It's all right. It'll find a low. Bitcoin looks great. Looks really good if we can close up here. We can close up here in the 60.2, 60.3 range. It looks really strong. Really strong. Really good. Yeah. So, guys, I think we're looking strong on our thesis. I think we're looking good. Even if stretch is just at 87, I think we're good. Guys, that has been the show for today. What a show. What a show. It is a beautiful day in New York. The US is playing tonight. Actually, I want to look at that real quick. Let's look at this. Wow. We are very, very favored to win by a lot. Wow. Wow.
W's in the shot.
And then I think we play France if we win.
Oh no!
Yeah, that's not gonna be good, guys. The way I saw France play yesterday, I don't think the US has much of a chance. Oh, it sucks to be a patriot in soccer. These guys, it's the 250th anniversary of the United States of America. If we beat France, we will burn this place down. If France loses, they will burn Paris down as well. The French always do that. They always burn their city. I don't get it. Guys, I think Bitcoin looks great. I think it looks ready to go. Ready to touch 61. I don't really think that many people are long. I think people are pretty short and pretty scared right now. So I think it's perfect. Guys, go USA. W's in the chat. W's in the chat. What a stream. Great stream today. You know where we'll be tomorrow. We don't have a stream on Friday. It's the long weekend. Great stream today. Markets look strong. We look good here. The roll-up looking good here. The roll-up army's looking great here. Our bags are looking strong here. Our thesis is looking good. Our summer bounce is looking good. Our interviews today are looking great. The US is looking great tonight. It's a beautiful day out. A lot to be positive about. Stay positive. Bearable. We're going to be here. We're going to hang out. We're going to do the show. We're going to rip. We're going to invest in the right assets. We're going to pick the right coins. We're going to time it right. And we're going to crush this next bull. We're going to crush this next bull. We'll see you tomorrow. Same place, same time. From the financial capital of the world. 12:30 p.m. Eastern. You know where to find us. Much love. Inshallah, Roll Up Army.